Forced to work from home by your employer? Laid off or feeling depressed at home? Do you want to make money working from anywhere? We'll show you how to do it from your couch. It's time for another episode of the Work From Home Show. Coming to you from their homes in Austin, Texas and Tampa, Florida, here are your hosts, Adam and Naresh.
Welcome back to another episode of the Work From Home Show. Adam, how you doing, my buddy?
I am doing great, doing well, ready to rock and roll. How you doing today?
Doing all right. Naresh Vissa here, as usual. And before we get into our topic, I don't want to waste too much time. But one thing I want to say about the previous episode that you and I did, Adam, on kind of work from home services, like the SEO, the online stuff, I did leave out, I forgot to include another way that our listeners can make money. And this is another way that
cheating our listeners, Naresh. You're cheating our listeners.
Well, I'll tell you, it's not very lucrative to do this. So I'm an expert network, or I'm a consultant for several expert networks. So they're an expert networking company. They're basically these corporations that bring on consultants as independent contractors, and they create this huge, hundreds of thousands of experts. They bring them on as consultants, and their clients are like banks, hedge funds, brokerages, consulting companies, etc. So they have these contracts with these like Wall Street type of firms, and the Wall Street firms essentially pay them like an annual subscription fee for the right to tap into this expert network. So I've been a consultant for one of these expert networks called the Garrison Lehrman Group, GLG. I almost worked for them like maybe 9 years ago. But whenever somebody needs help with like online and digital marketing or podcasting or anything in those arenas, like if, let's say, Goldman Sachs is looking at doing a deal, like Spotify has gotten into the podcasting game. And so they've hired, investment banks to acquire podcast companies and podcast technologies. So if, for example, Goldman Sachs, like their private investment group, wanted to learn more about the industry, they go to one of these expert networking firms. They say, hey, get us in touch with an expert on podcasts. And then they contact me. So in their large database, they just type in a few keywords like podcasting or something. And, I pop up, they contact me and they say, hey, like we have a client. They want to talk to you about the podcasting industry. When are you free for a call? So they set up the meeting. I talk to the client. I get paid by the minute. So I set my hourly rate. I get paid by the minute. And then at the end of the call, they directly deposit the money into my bank account. So there are some people I know who are these like expert consultants in like IT, technology, oil and gas, and they're doing a call like every week because there's a huge demand for their expertise. Or you can be someone like me who I have a call maybe like once every 6 months. So we're not talking big money here, but if you are interested in becoming an expert source, reach out to us. hello@workfromhomeshow.com. That's hello@workfromhomeshow.com. Reach out to us and I'll hook you up. There's no charge or anything. I'll just hook you up. And if you think that you're an expert at any specific area, I'll get you in touch. And another way to make money, it's just kind of a passive, cool way to make money, good way to network. Say that you got to talk to some, big, well-known companies.
And you can put on your website consultant to
exactly
XYZ company.
Yeah,
looks good.
Yep. And so Goldman Sachs actually was I can say they were a client because they asked for my expertise and I got paid.
You got a check, their name on it.
Yeah, not a check, but direct deposit
Fair
to
enough.
my bank account. I do have documentation, but yeah, it's pretty cool. And the other thing I wanted to mention that we didn't mention is paid surveys. So there are sites, you can just go on Google and type in like, get paid to survey. And I've done some of these before where they're like studies, and they'll send you like a survey that you have to fill out every day. They send you a new survey on a study. Like it could be, I did one on my water consumption habits. So like over a 1 week period, every day I had to log anytime I got in touch with water. If I drank it, if I used the toilet, if I showered, I did this, and then I had to answer questions. And they paid me, like $200 for maybe like an hour's worth of work. So there are a lot of these survey companies out there that do these things. It could be water, it could be some kind of exercise, maybe they're market research on something. So they're out there, and if you can do it from home, you can do it on your phone. Most of them are done on your iPhone or your iPad, because you'll have to take videos of yourself, talking about things. So look, we're not talking, these aren't full-time gigs, being an expert consultant for like these large expert networking company, unless you are like a big name who can get those contracts or those clients. It's just kind of a good way to earn a few bucks here and there from home without doing much work. So definitely recommend it. And just to tell you some of those survey companies, one is called Product Report Card. So that's one of them. Check it out. And the other big one that I've done is called Focus Insight. So that's one that does more extensive studies. So check him out. If you have any questions, hello@workfromhomeshow.com. Adam, let's dedicate this episode to real estate investing from our homes. You and I are both real estate investors. In fact, you're the one who kind of got me into it, because you went first.
I started it. Well, you hooked me up with the person, and then I started it.
Yeah, I hooked you up. You started it, and then I was like, Adam's doing it. I think this is something I should look into.
If he can make money, anybody can make money.
That's basically what happened. But tell us a little bit about how many homes, single-family homes, you currently own, like what the cash flow is looking like, gross, what the net profit is looking like.
Yeah, let me pull up my spreadsheet real quick. Yeah, I got spreadsheets out the ears with this, and because this is one thing that if you're gonna do it, you got to make sure your numbers work. You got to make sure that you're not losing money, because you can have money coming in from your property manager where it looks, you see money coming in, but you could end up losing money in the long run. So we have 6 properties. So remember, people, I live in Austin, Texas, but we own properties in Jackson, Mississippi, Memphis, Tennessee, and Little Rock, Arkansas. And a lot of people are like, why do you buy properties so far away? Well, because the numbers in Austin don't make sense. Properties here are so expensive that you can't, you might be able to rent it out for your mortgage payment when you're all in, but you're not going to be making any money off of it. We might be able to make like $150 a month on our home if we were to rent it out, but for the down payment we'd be making like nothing.
Well, let's talk about that a little bit.
Okay.
So the first thing is, Adam, you and I invest in like boring markets that people would not be excited to visit.
Yeah, definitely.
Yeah.
They're good markets. They've got good, working class people in it. People who, you go anywhere, you've got good people living everywhere, but these aren't like we're not buying in the high-end $1 million networks. We're buying, we've gone as low, our very first property was only $53,000 just because we were very hesitant, because neither of us grew up in real estate investing households.
Yeah. Yep.
And then we've gone up to right under $100,000. We've gotten one that was $99,000, but we haven't crossed into the 6 digits yet.
Well, we should make that clear. Neither of us, you, your family, me, my family, we're not real estate families. So we were completely new to this. And just like you, the listener, most of you are probably very new to real estate investing. And that's why we're doing this episode, to teach you that you don't need to come from a family of real estate investors to not just invest in real estate, but to have good passive cash flow and side income coming into your bank account every month.
Yeah, and I mean we kind of make a rule. I mean, you and I, we do the same thing. We use the same network to buy, but with their pro formas, which is kind of the evaluation of the deal, if it doesn't cash flow out at around $200 a month, positive, should say, positive cash flow, there's got to be a good reason for it if it's not making $200 a month. So that's kind of our line. Like I have it here, you know, I document everything out. We've got our rent, our expected vacancy, our expected management fee, our expected mortgage payment. Well, that's not expected. Bank's gonna want that one way or another. And then our maintenance reserves. And I keep track of it all in the spreadsheet just to figure out what I should be making. And then we have another one where we document, you know, how much rent we actually collected, how much we spent on repairs, how much we spent on management, how much we spent on the mortgage, and kind of the cash flow, the actual cash flow for that month. So I've got one spreadsheet that's just designed for what everything's supposed to look like. And then we've got another one that's the what's actually happening spreadsheet. So, I mean, it's been good. We've had some years that, you know, weren't as good. Like we had one property. This was actually, this is the first property we owned. The very first year we had some big expenses we had to pay. And we only made $150 that year. In 12 months, we only made $150, which isn't great. But then the next month we made almost $3,700 on it. So, I mean, it can go, you know, it can fluctuate.
You mean the next year?
Yeah, the next year. Sorry.
Yeah.
Yeah. So 2018 we only made $150. 2019 we made just under $3,700 on that one property.
Yeah. So let's tell the listeners a little bit about how they can do that, how they can invest just like we do and make money. So we talked a little bit about like these boring linear markets, like Jackson, Mississippi, where I own some properties. Tunica Resorts.
Yeah, where are you again? You're in Memphis. You're in Jackson.
Yeah, Jackson, Tunica Resorts, also called Robinsonville, Mississippi. So it's like the Las Vegas, the Vegas of the South. And then I'm also in Memphis, Tennessee. And these are all like kind of not just working class, but like blue collar type of markets. So if there is a recession like we're currently in, or even a depression, the home values actually, they won't fall too much compared to like on a percentage basis or sorry, on a dollar value basis. Buying a $53,000 property like you did, Adam, maybe it'll go down to like $45,000 in a depression. Whereas if you bought a $5.3 million property in San Francisco or New York,
it's probably worth 2.5 now.
And that goes down to $4 million, which it can easily go down to, then you've lost yourself quite a lot of money. So we invest, I want to be clear that we don't invest for appreciation. At least I know I don't for sure.
No, we hit a home run on one of ours, but it wasn't intended. Now, I do want to say, so we should specify it as well for the people listening. We are not slumlords. I mean, my $53,000 house, that's dirt cheap, but we're buying turnkey properties. So we're not talking about the whole, what they call the BRRRR method, the buy, rehab, rent, refinance, repeat, or something like that, I think is what it is. We're not talking about that. I mean, I've never touched any of the property. I haven't even physically seen, personally, any of these properties that we own. It's just, you know, we're buying turnkey. So this house, it was really cheap, which just means it's not in a good neighborhood. And the neighborhood this is in, I'm assuming, is not that great, but it cash flows and it got us in the door.
So yeah, that just opens up a ton of questions. We're gonna have to go into them one by one. But going back to the linear markets, we're investing for cash flow. We're not investing because we want to buy a $53,000 property and we think that it's going to go up to $100,000 in 5 years. Absolutely not. Instead, we want to rent that property out and get cash flow every month. So I'm making on my properties, which were purchased anywhere. So I got started in the summer of 2017 because I had a big client back then and they were driving me nuts. They were driving me crazy. And Adam, you had started buying properties and people, a client of mine and yours, he had been telling me for years, hey, you're young, you need to get into real estate. Like you don't put it off. Like, you'll never regret it. And so basically this client drove me insane. And I said, you know what? I got money in the bank. I'm just going to go ahead and jump right in. I'm just going to go right now. I'm going to find something on the Turnkey website, and I'm just going to go ahead and buy it and just learn while I'm at it. So overall, it was the only way you're going to learn is by jumping in and doing it. And that's why Adam and I are here to help, because if you want to get into real estate investing, Adam and I we're licensed. We both have real estate licenses. So you can reach out to us, hello@workfromhomeshow.com. And if you want us to actually coach you through the process step by step, no payment. We won't even take any money from you. We'll do it. It's an added service. We'll help you find deals. We'll coach you through the process. We'll hook you up with the best lenders so that you get the lowest rates. Hook you up with property managers so that you don't even need to manage the homes. And like Adam said, we both own properties all around the country, and we've never once visited any of these properties. And we've
I have
never
no plans on going to the market that they're handing.
I don't want to. I don't want to visit those properties. I don't want to talk to the tenants. I have my property managers handling all that. All I know is on the 10th of every month, one of my property managers deposits a bunch of money into my bank account, and on the 22nd of every month, my other property manager deposits a lot of money into my bank account. That's all I need to know. Yeah. And so it sounds pretty cool, I think.
Yeah, and I want to just let people know we're talking about this, and yes, we are licensed, but our goal isn't for us to sell you a property. I mean, if you want to come through us, that's fantastic. Happy to help, but that's not our primary goal. This is just one of those things that, especially if you're coming from a family like I did or Naresh did, to me, the very idea of being when I heard landlord, it was like this big corporation who owned 1 million houses that, was just like the big evil landlord. Or it was somebody who lived on the other side of town, like the first house my wife and I ever rented. It was just a guy who owned the property, then he met his now wife, and they didn't sell his house, and they moved into her house, and now he was renting his house out. Like, that was the only kind of landlording experience I'd ever seen and I'd ever known of. So it just wasn't even, if you had asked me 6-7 years ago, hey, do you want to be a landlord? I would have said, no, I don't see myself ever doing that, because it was just so far off, and my mindset wasn't in a place that made sense.
Same with me. And I actually heard horror stories from when I lived in Baltimore. I had friends who owned single family homes, and they were like, do not get into real estate. It is a nightmare. The tenants, if you buy property near a college, it's a nightmare because you got these kids living there. They party, they trash the place, and then they start fighting with each other, and they call you to settle the fight, and they break everything. It is just a complete nightmare. So I was like, okay, I'm never going to touch real estate. But then I got myself educated on it, and I realized you don't have to buy the single family home in a college town, renting it out to a bunch of 19-year-olds.
Yeah, don't do that.
Yeah, don't do that. You don't have to manage your property. Like, your tenants don't even need to have your phone number. Let them hire a property manager and let them call your property. That's what you're paying the property manager. And we pay our property managers 8% of the rent. That's kind of the standard across the board. So if I make $800 in monthly rent from a property, take 8% of that, that's $64. That goes to my property manager. And yeah, they get a little more on like renewals or if they find a new tenant. But to me, it's like, okay, if I'm making money, then it's worth it to pay the people who are helping me make money. They do all the collections, they do all the tenants. I mean, they do everything. Literally, they do everything. I spend about 1 hour a month looking for deals, trying to find, my next great real estate purchase. And then I spend another hour a month looking at my statement. So the property managers send like a monthly statement. So I do that just to make sure all the numbers add up and that I didn't get screwed, because sometimes they do make mistakes. And then I spend another probably hour a month yelling at my property managers because
that
because they're not managing my properties properly. So I spend a total max 3 hours a month running my real estate business. And I think maybe not this year, but next year will be the first year that I get our gross revenue is going to be six figures. So, hey, it's working out pretty well so far.
Really? Your gross revenue? Wow. All right.
Gross. Not net profit, but gross.
Okay.
Yep. So,
yeah, that's fair.
I own 7 rentals, all single family, 1 primary place of residence, and getting my primary place of residence, because I had that real estate background, the 2 years of investment experience, I got as an amazing deal on our primary place of residence on the loans, and we're probably going to refinance soon as well. So that's just kind of a little background on what we've done. But Adam, I want to talk a little bit more, kind of like step by step, how our listeners can do this. So the first step is
get educated.
Well, that's vague. Yep. That's vague.
Oh yeah. So the first thing you're going to want to do is just start looking around for podcasts. Start looking around. Like there's a big website called Bigger Pockets you can go to that has all sorts of stuff. Personally, I think they have a Bigger Pockets podcast. I never really liked it that much. I listened to it for a while and thought, this is kind of dumb. Let's see, what else is there? You can get...
I'll say this. The easiest thing, like I'm not trying to be a commercial for ourselves, but instead of wasting time looking around at all these different podcasts, just contact us, hello@workfromhomeshow.com, and say, hey, I want to invest in real estate. Help me find deals. And Adam and I will send deals to your email. We each run our own, because we have our license, we each run our own book of business. So we can just add you to our email list and you can start getting deals. And if you don't want to get the deals, just hit the unsubscribe button. You don't have to get them. It's not a big deal. But that's really the first step. It's getting deals, and then you're going to start getting these deals, and you're going to see these pro formas, and you're probably not going to understand what the numbers mean. So the next step is asking Adam and me, asking us, hey, okay, so I see these numbers. So I see this return is 30%. Is that good? This ROI is 30%. Is that a good thing? This cash on cash return is 10%. Is that good or bad? So asking questions like that.
You got a 30%, 10%. I want to see that property.
Yeah. Yeah. So, asking questions, that way you take some time to learn and understand, okay, cap rate, the cap rate on this property is 10%. Is that good or bad? Asking questions like that to us, or you can just look it up yourself on the internet and, type in, hey, what's a cap rate on Google, and find out what a cap rate is, and find out what a good cap rate is, what a bad cap rate is. So I would say step 1 is reaching out to us so we can send you deals. Step 2 is start reading our emails, going through the pro formas, and asking questions either to us or to Google. And like Adam said, educating yourself on what's a good deal versus what's not a good deal.
Yeah, and we're happy, even if you don't want to buy from us, I'm happy, and Naresh is happy too. Just, if you just want to know, hey, what would make a good investment? What should I be looking for in terms of the area? Even if it's not in one of the markets that we have connections in, it doesn't matter to us, because we know you work from home, you don't want to work. I mean, I think everybody's dream would be to make money and not have to do much work, right? Would you agree with that, Naresh?
That's the dream.
Yeah.
That is.
I mean, every single person we talk to and been like, "What's your goal?" Their goal is, it's always, I want to have my real estate income replace my W-2. I mean, have you had somebody tell you that that's not their goal?
No. Well, yeah. For real estate investors, that's certainly the case. But in general, people are always like, I want to spend more time with my family. I want to take more vacations.
Right.
But I want to have the money in order to be able to do this. And that's why we created this podcast, the show.
Yeah, I mean, it's one of the things I have to ask everybody I talk to just to make sure. But I almost feel stupid asking the question. So I'm like, what do you want to? What's your goal in a real estate investing? And every single time it's, well, I want to replace my W-2 income with this. Like, all right. Or, I want to make enough where I can cut back and go do more of this, that, and the other. And so really, one of the things that's important, if you're right now sitting at home and you're starting your work from home journey, or you've been doing your work from home journey and you think, I'm not going, whenever I'm 65 or 60 or 70 or whatever, and I want to retire or I want to cut back, because retirement, the definition of retirement has been shifting for years. And I don't really know what retirement means to most millennials and those kind of people. Like, I think people are going to start working until closer to death, just in a reduced role, personally. But when you do want to cut back, you have to ask yourself, where am I going to be getting the money that covers that gap? And this is one of the things that, if we hold on to these properties until I'm 70 years old, they're going to be paid off. We're going to be making insane, cash flow numbers from them. And, life's going to be just kick back and relax, honestly. I mean,
well, I should say this, Adam. You said the properties are going to be paid off, and I would actually recommend that you don't pay off.
I know, yeah. I have different beliefs.
You should refi until you die.
Yeah,
refinance.
I agree with that to a point. I agree with that to a point. But there comes a point where, okay, so I'll just tell all of you, Aaron and my strategy. So our goal right now is we're saving up money and we're buying a property pretty much any chance we get. And at the moment, during the COVID-19 pandemic, in terms, you're hearing about people not paying their rent. And let's be honest, that is a legitimate fear. Right now, but we have personally three tenants who are Section 8, which means that the government pays their mortgage. And those 3 Section 8 tenants, their rent will cover all of our mortgages. So that's the good news. Now, our goal is we're going to keep buying, and when it makes sense to refinance a property, we'll refinance a property. But eventually, there comes a time where you own enough that you can hit the numbers you want. And then when we hit that number, we're going to go a little bit past it because we want to be sure if we get a whole lot of vacancies, we can still cover it. So let's just say, for instance, our goal is $10,000 a month in retirement. So what we would do is we would say, all right, if we had 10 homes that are bringing in $10,000 a year, let's say, it's, numbers game, whether or not that's true, then we would want to have maybe 12 or 13 homes that could bring in $10,000 a year. And then we could, once we get past that number, we can start paying off properties. But we're going to refinance until we get to the number we feel comfortable with, then get a few more, and then slowly start paying them off. Because once you get your numbers paid off, the monthly income you get goes up. You have more lazy money, lazy equity as they call it, money that's not being used, that's in your home. But at that point, you're at the point where you've got the cash flow you need, you can live happily, and if you ever need it, you can always get a home equity line of credit and pull money out of your properties to live on if you have to. It's a little different goal than our current strategy and our business strategy, but I think in the long run, that's kind of how we're going to play it.
Yeah, well, everyone's different. I can tell you my strategy is like the polar opposite of what you guys are doing. And look, everyone's different. Like, our goals in life are different. Our aims are different.
So how many do you want to own?
I have goals of owning apartment complexes, mobile home parks, owning at least, I would say by the time my son goes to college in 18 years, I'd say at least 300 rental properties.
Wow. All right.
But again, it's not a goal thing. Like, I don't view this as a goal thing. Like, it's not my goal to make X amount of dollars or my goal to own X amount of houses, because I mean, to be quite frank, I don't need to do any of this. Like, I could continue working my Christian media and marketing and make my good income there. My wife does very well being a physician, and we could just live our jolly lives. So I haven't gotten into anything, whether starting Christian media and marketing or doing the real estate stuff or some of the other private equity deals that I do. It really was never about, I need to make X amount of money to pay the bill or X amount of money to retire. It was really more just kind of my own personal interests and my own personal, hey, this is something I want to pursue. It was never really about the money. The money just happened to come. So in the case of real estate, it's great to see that, oh wow, like I remember I used to work so hard when I got started. I went through some down months and I would work so hard just to make like $2,000, getting clients and making $2,000 a month. And now it's like I don't even have to do it. I work 3 hours to make, double that through my real estate properties per month. So it's like, oh, cool. Like I figured it out. Like 6 years ago, I used to work so hard, and now, it's just a cool, fulfilling feeling. So to me, it's like I'm very aggressive. You probably know that, Adam.
Yeah.
And so it's like, okay, we bought one. We need to find the next deal. Then we need to find the next one. We need to keep going and keep going. And if I run out of capital, okay, I need to make more money in Christian media and marketing to get more capital. Or I get my wife involved as a partner, or I find a way to get a loan or a line of credit from a bank. Need to keep going, keep going, keep going. That's just kind of how I think. It's not about, oh, I've got my 10 properties, now I'm just going to retire and be okay with it.
But eventually there will be a day that both of y'all will want to stop working and you're going to live off your income. So I mean, that's kind of where we are. I mean, we'll probably, because to me, we're happy because we're providing, housing for people. I mean, honestly, people, it's a great feeling to know that, I have these properties that people need to live because they don't either want or they can't buy a house. And so I'm providing them with, a roof over their head. And one of the things that I've talked with Erin about is when our kids get older is when, at least I want this, she hasn't fully gotten on board, I don't think, is that when our kids get married or reach an old enough age, we're just going to either give them a house or give them the money to buy the house. Like that's so they can get started on their investment journey. Because, if I give our kids, $20,000, which is, you can buy a starter investment
easily.
Property with $20,000 and say, here's $20,000, go spend it on whatever you want. Then I've given them $20,000. But if I give them $20,000 and they go out and buy a property, I'm now giving them $2,400 a year on positive cash flow. And they have the equity in the house, and they just keep getting and keep getting and keep getting and keep getting. So that's kind of our goal. And then our kids see, oh, I can start doing this for myself, and then I can live the life that I want to live. Because eventually, when you get to the point, if you are working at your job and you're doing things that you kind of like doing, but it's not your dream job, eventually it'll get to the point where you'll be making enough money that you can cut back on what you're doing or get rid of it completely and go after the things you actually want to spend your days doing. I mean, why waste your life doing things you don't want to do?
Well, I mean, running Christian media marketing and real estate investing, those are all things that I want to do.
Right.
Like, I don't.
But there are a lot of people out there who don't love what they do.
Yeah, absolutely. Absolutely. And so you bring up like your kids, for example, and I've talked about this with other people who I know, saying if all goes wrong with my son, well, he can inherit, basically what I've built, with whether it's Christian media marketing, if he has a skill set, or the real estate side, he can basically inherit it. But already I've started, like, he sits in on some of my real estate calls. He listens to the real estate podcast. Yeah, he's only 2 months old, but
you're putting a lot of pressure on a 2-month-old dude.
Well, I'm basically already, like, I want to groom him so that he at least understands what his dad does. And
we definitely have that conversation with our kids. I mean, all 4 of them know that we own properties that we rent out to people to live in. And I'll take them, and every so often I'll show them the spreadsheets and show them, what each property is doing, where we've earned money, where we've lost money, and kind of walk them through the whole process. That's definitely something that we've done.
Yeah, so and it's because I know that I'm going to leave some kind of legacy for my kids or my grandkids or whoever. Like, I've planned my financial strategy around that. Whereas, like, how I grew up, to be quite frank, my father, I mean, he was just a corporate guy. So there wasn't really like any asset that he could pass down because he always had a job. So now he's retired, and I truthfully had no idea what he did for a living until the Deepwater Horizon incident, BP incident happened I must have been like 21 years old. And then I found out what my dad actually did. I knew he was like an engineer who worked in oil, but I didn't know like what he did. So it took me about 21 years to realize, oh, okay, that's what he did. Simply because A, it was boring. Like, I would go to his office as a kid and it just seemed super boring. And B, it was just never, business was never a topic of discussion in our family. It was never about business or money. Education, yes, but not like business or money.
Yeah.
So anyway, going back to kind of, we talked about the first two steps, right? Step one, reach out to Adam and me. Step two, get yourself educated on like how to read a pro forma. We've already talked about markets that we would send deals from, like, you know, boring markets like Memphis and Jackson. Now, the next step would be if you like a property. So you see something, you're like, oh, I really like it, and you want to move forward. So the next step would be getting financing. So you can either get your own lender and go to people locally, or maybe you have like a mortgage officer who you like, or you can ask Adam and me. We know some of the best lenders in the country when it comes to extremely competitive low rates. Really, I think that's low rates and low closing costs are the only two things that matter.
Yeah, that's what lenders are there for. I mean, if they're nice people, that's great, but let's be honest. You really just want their service, what they're willing to offer. I mean, that's all they can compete on is rates and their fees.
Yep. So you can get in touch with us. We're constantly, it's like every 4 or 5 months, we find a different lender who has lower closing costs or who has lower rates. So you can get in touch with us, hello@workfromhomeshow.com. We can hook you up there. After you get the financing, we can help you through the process, like tell you which inspectors to hire in the area. Again, we know we have those contacts, like low cost, like the lowest cost inspectors, what you should tell your inspector, because the home inspector is actually your friend. So you want to just that simple 5-minute phone call, giving them a call before they go to inspect the property and saying, hey, like, you work for me, I'm paying you. I always tell my inspector, put everything that you find down into that inspection report. Even if it's a tiny little outlet that needs to be replaced, put it on the inspection report. And that way, when I get the report back, I go to the seller and I say, you are fixing every single thing on this inspection report. Your lender is already going to get an appraisal done. So there's going to be an appraisal report. So I go to the seller, I say, here's the appraisal report, here's the inspection report. You fix 100% every single thing, and you send me a checklist after you're done with pictures of what you fixed. And if you don't fix any one thing, I'm walking away from the deal.
Yeah.
And that works. I mean, the maintenance, it cleans up your maintenance costs over the next 2 to 3 years. It just improves your house, and you get the seller to pay for all that stuff. And the seller is going to do it because they've already got you in. They've locked you in into a contract. They have your earnest money. So it's not worth it for the seller.
They put too much effort into it.
Yeah, because if they're like, oh, I don't want to fix this $300 maintenance thing, they're not going to do that because you're already so invested. Now they got to wait, find a new buyer, the property's vacant. So, you know, the whole deal. So yeah, after the inspection, let's say everything goes well, you close on the home. So then now the next question will be, okay, now I own this home. How do I find a tenant? How do I manage it? Easy. Reach out to Adam and me. We'll hook you up with property managers, really, really well-respected property managers with low fees in the area who will take care of your property and just do all the work so you don't need to do it. It's that simple. And so once you go through that process with the property manager, then it's like, boom, you're done. You buy one house, that's like your learning experience. And then scaling from 1 to infinity becomes easy after that. It becomes second nature to you. And so that's how you end up growing your portfolio. But I will say, deals are hard to come by. So right now, like, I've been looking all this year. I haven't found a single good deal. The good deals that I did find, they sold within minutes of going public.
Yeah.
So
it's been
deals
a little disheartening.
Yeah, they're difficult, and they are going to be they're going to get even more competitive as interest rates continue to go down, home values plummet. Actually, the deals that we look for, like these turnkey homes that have been rehabbed, they're going to get more and more competitive because the investors who have cash sitting on hand, they're going to jump right in and swoop up these properties.
Yep. Unfortunately, that's true. Well, fortunately for us because we're selling them, but unfortunately for some investors.
Yep. So I think that just about, Adam, like, do you think there are any other glaring questions that we didn't answer on how, like, I think we really walked people through the process on how we do it without even leaving our homes. We haven't left everything's been done behind the computer, and even the papers that we sign, the notary comes to our house and we sign the papers at home. So never left.
Yep. I mean, it's easier than I ever imagined it would be. It's been more profitable than I thought it would be. It's been good. So it is a high startup cost. I mean, if you don't have between $20,000 and $25,000 at this point in time with the down payments that are required, you're not going to be able to get in. But you can still talk to us and educate yourself. I don't want this to sound just like a commercial for us, but it's just something that has changed both of our lives, I think, and so that's why that's why we got into it. That's why we're telling you about it. Is it really frees you a lot whenever you realize that you're on the path to what everybody calls financial independence. When you achieve that, it really frees you up to do what you really want to do.
And I think the most important question that we kind of answered that people would still have is, okay, so you guys are buying these properties from home. Like, how the heck do you do it? How do you trust that the property exists? How do you trust that
that's an easy one.
Vendors who you work with are legitimate?
You have to remember, people, you're not the only one buying this property. Who's actually buying it is the bank.
Yes.
The bank is buying the property. You're just paying the bank back. So, yes, I've never seen the property, but I've had an appraiser go out there and look at it and make sure the property is there, the property is good to go, and the property is worth what I'm paying for it. I've paid an inspector to go out there and look at the house, take pictures, take a walkthrough video, and send me all of that information. And then I've had him go back out and look at it. So I've had 3 points of contact with the property then. I've gone to Google Street View, and I've gone up and down the neighborhood to make sure that the property exists. At that point in time, if you can see pictures of the inside, see a walkthrough video of the inside, see the appraisal, see the home inspection, see it on the Street View, I mean, that's as good as being there.
Absolutely. So I use Google Street View also. It is a little older, so it's not like what it currently looks like, that area or that property.
But you can tell it exists.
Yep, it exists. And then I've also FaceTimed with the seller. So they'll just drive over there, FaceTime with me, and walk around and show me stuff. And really for me, because you can't really see much on FaceTime, it was just I wanted to make sure that the place existed. So I've done that. But like Adam said, this is a really important concept. People ask, oh, well, like, shouldn't you pay cash? Just pay full cash. And it's no. With real estate, no freaking way. You don't pay cash. You always take out the minimum that you can, the minimum down payment that you can take out. You take out a mortgage because the lender.
Not always. Sometimes you want to go 25 instead of 20.
I don't know, because you can generally negotiate those interest rates down to.
I mean, if you pay 20. Points, yeah, but there's like last time.
No points. No point. I'm saying you can generally negotiate it with the lender.
You've had better luck than me then.
Well, remember, most things in life are negotiable. So a listed, especially when it comes to rates and points or mortgage rates, that is they're changing every day. Like literally, those closing costs, those interest rates are changing every day. So if a lender tells you something, if they quote you something today, just call them back tomorrow when the rates are different and tell them, well, I'm going to go to this other place because they offered lower rates, and see how they respond. I mean, it's pretty amazing what the lenders have done for me when I've taken that hard line. But like our home here in Tampa, we put zero down, no points, no mortgage insurance, because my wife is a doctor and they have a special doctor loan. And so that's absolutely incredible. If you can put as little down as possible in that situation, just know this, the interest is deductible. So get your accountant, send them your mortgage tax documents, and your accountant will take care of it. We haven't even talked about the tax. We're not going to get into it, but real estate comes with some pretty incredible tax benefits. Incredible, insane tax benefits. And in my case, my wife is a W-2 worker. I'm not. I have my own business, or I have two businesses. My wife is a full-time employee. So because she's married to me, she gets to participate in those tax benefits that her colleagues, they don't get to participate in unless they're married to somebody who owns a bunch of real estate as well. So you can make back a lot of money in taxes through real estate. But going back again to the whole location thing, the lender is taking on the risk. So they're going to make sure, if they're paying 80% for a property, they're going to make sure that it's a damn good property and that it's worth the value, that because they're putting up the risk. So that's why you take out the loan, because it's low risk to you. It comes with the tax benefits, the deductions, the interest deductions. It's just a way better. And of course, again, we're not going to get into inflation, but we live in a very low interest rate environment right now. And inflation is, I mean, it's almost like you're getting a free mortgage. That's essentially what it is right now. So then again with, okay, well, you buy a house and the lender, they'll make sure that it's a legit property. Well, you don't live in the area. How do you manage it? Again, property manager. You get them to handle all that so you don't have to physically be there. And that's how, I mean, I know people who own tens and tens, in some cases, hundreds of properties without visiting any of them or dealing with a tenant. And that's where you want to be. This idea of, that's old school. We're the work from home show. We're not the travel around the country and look at houses show. You're going to waste way more money doing that, staying in hotels, Ubering from place to place, than if you're just at home and you don't even spend a dime for any of that stuff. So reach out to us. hello@workfromhomeshow.com. This was one of our longest episodes, so you know where to go, workfromhomeshow.com. And until next time, keep on working from home.